All right, I think we'll just assume that everything is going well, that we are indeed recording. So welcome everybody. It's a great pleasure to be hosting you today. Welcome to all of our joiners here. Welcome to all of our guests. We're in the lucky position to be discussing what is ahead for Nabla in a very general approach, so that hopefully everybody can get up to speed what is coming up. And with that, I'd like to pass the microphone to our guests for a very brief introduction. Aaron, why don't we start with you?
Pleasure to speak here. So I'm Aaron, co-founder of Nabla Finance for Product and Strategy. Originally, I'm a PhD in physics, but turned full-time blockchain and later DeFi already 6 years ago, so 2018. Even bought my first Bitcoin in 2012, but lost it in Mt. Gox in 2014. So I think I'm quite familiar with the space and super happy to have such a great team and great project nowadays.
Thanks, Aaron. Let's pass the mic to Gökhan, Samurai.
Hey, my name is Gökhan, and I'm based in Istanbul, Turkey. I do business development partnerships and growth marketing as well with Nabla Finance since last year, April. I'm in the crypto space since 2017. I started with my own startup a few years and have been trading in DeFi for a couple of years. And Samurai.eth is my public profile. Yeah, I'm happy to be here with you today. Thank you.
Thanks, Gökhan. Let's pass the mic to you, Abrayat. In the meanwhile, Niels, why don't you go ahead and introduce yourself briefly?
With pleasure. Yeah, hi, my name is Niels. I have an electrical engineering background, but following crypto since 2013, 2014 with sending minor Bitcoin to phone at that time. That was possible. I was following along with Web3 so for quite a while. Been there in the space since Ethereum Genesis. And yeah, I'm one of the Web3 engineers at Nabla and responsible for the smart contracts and tech related to it. Yeah, happy to be here.
Yeah, it'll be great to hear more about that later on. So, Abrayat, in case that you are going to rejoin, we're just going to have your short introduction at a later stage. I think it makes sense to kick it off for all of the people that are somewhat new or, would like a refresher. Aaron, why don't you give us a brief introduction about what Nabla is, so that people can get an idea. How is Nabla different from, example, Uniswap?
When I unmute me. You wanted to ask me about a quick introduction into Nabla, I guess. And what's the difference between Nabla Finance and, let's say, Uniswap? So, of course, our audience has very different levels of understanding, I guess, so I try to make it very high level. Nabla Finance is an automated market maker, an AMM, like Uniswap as well, which means that you can always trade 24/7 on Nabla Finance without the need of a counterparty. So you just trade with the liquidity pools. But there are a few major differences, actually 3 major differences. So on Uniswap, probably you're familiar, but maybe not all, the price for the asset that you want to trade is only defined by the liquidity and by the past trades. So if a lot of people buy, the price goes up. If people sell, price goes down. The price is always passively set, basically. Now, this works very well for, let's say, meme tokens or long-tail governance tokens that are traded mostly on-chain. But it doesn't really work well in the case that you don't need this price finding completely on the AMM, but it actually happens somewhere else. For example, stable tokens. So let's say you want to swap USDC in EuroC. there's no reason why this price should be completely defined on-chain, because you kind of know the fair price for EuroC. This is the case for many different stables, for many different RWAs, as well for stake tokens, where the price maybe is not defined in the real world, but you can mathematically calculate the fair price. And it's even the case for the big cryptos, because there as well the price is not really defined on-chain, but it's defined on the big centralized exchanges like Binance or Coinbase. Then the price on-chain, on the AMMs, only follows this price on Binance or Coinbase. And it follows it because arbitrage bots basically buy and sell to bring the price in line for profit. And their profit is actually a loss to the liquidity providers. So this passive pricing, price finding, doesn't really make sense for the big cryptos and a lot of other assets that I mentioned. And therefore, we employ a different approach. We don't have a completely passive price finding, but we employ an intelligent Oracle-informed pricing. So we use Pyth oracles, and they tell us the price, for example, on centralized exchanges. And if we see the price for, let's say, ETH goes up by 0.1% there, we reflect this automatically on Nabla. There the price goes up 0.1% as well, without the need of an arbitrageur setting this, adjusting this price, and therefore without a loss to the liquidity providers. Now, we're not the first one doing this. Basically all perp exchanges like GMX or Hyperliquid and these kind of things, they basically use a very similar approach. There are even a few AMMs already that do this as well. For example, on Solana, there's Liquidity. I really like their team and their research. Look into it. They really prove that it's a super successful approach and super profitable approach. This only works with modern oracles, like now the Pyth. Basically real life oracles off-chain that only get validated on-chain if a trade happens. It doesn't work with the old-fashioned price feeds that we know from the past, because they are too slow for that. Okay, this is the main difference, but there are two more differences that I just want to very briefly talk about. One is that we have single-sided swap pools. So on Uniswap, for example, you have always two-sided pools. You have the asset A versus USDC, asset B versus USDC, asset 3 versus USDC. You need a lot of USDC as what I call pairing liquidity, so that you can trade between all the assets. But that's, of course, kind of idle liquidity to a big degree, and it's still costly. You still need to attract this liquidity. So with single-sided swap pools, we don't have that need. Our single-sided pools interact directly with each other. This only works because of the Oracle-informed pricing. This we combined with our third innovation, which is basically that we separate concern of providing assets from the concern or service of taking on risks. So in Uniswap, if you provide liquidity to a pool, you provide two assets, you're exposed to the market rates of both assets, you're exposed to impermanent loss, and take on basically the market-making risks. In Nabla, it's two different things. Either you provide one asset to a single-sided swap pool, or you participate in this market-making risk by depositing into the Backstop pool. It's two different risk profiles for two different target groups. And by doing so, basically the biggest part of the TVL on Nabla Finance will be single-sided low-risk liquidity. It's more like in a lending protocol than an AMM. Therefore, basically, the fair rewards can be lower than in an AMM because we don't need to make up for impermanent loss. We don't need to make up for all these risks. And therefore, we have a hyper-competitive AMM here. I think that's enough for now.
Yeah, thanks so much, Aaron. So, yeah, quite exciting stuff that we are soon going to see, in fruition. In the meanwhile, we have been having a great success with all of you guys joining in, testing. So that has been very, very helpful for us. In the trenches, of course, has been the community manager of Nabla, Abrayat. Let's hope that your mic is working now. Maybe you can give us a little bit of a review of how you experienced the testing phase leading up to this very moment.
Yes. Hello. Can you hear me now?
Yes, we can. Yeah.
Oh, great. I had to join through my phone. Yeah, I am Abrad, known as Abdul Rahman, the community manager here at Nabla. Basically, I've been with Nabla since early last year, and then it's been a very, very good moment looking how we started with the Discord, the community being very small, and then the growth we had throughout the Testnet Alpha period. It was actually very massive, a lot of activities, and so it's very, very successful.
Yeah, and thanks to everybody's participation, we have had the opportunity to collect a lot of valuable feedback. So everything from identifying issues, optimizing contracts, optimizing the user interface. A lot of stuff has been happening since the first testing phase has concluded. So I'll use that as a segue to our short overview of what has been happening in the tech sector. So yeah, happy to have you here. Sorry, I just lost the connection there. Maybe you can walk us through what has been happening on the tech side. What can we look forward to, and give us a little bit of an overview here.
Yeah, happy to do that. I will not touch all improvements we are doing since Testnet Alpha, but I will briefly touch the most prominent developments. First is, for example, gas optimization. We are a small development team and hired recently an engineer who is an expert in gas optimization. So in general, make the protocol more gas efficient. So yeah, to the goal that users need to spend less gas as possible. Secondly, we needed to optimize the subgraph, which is indexing the traffic that is happening on the protocol, and we need to do it more efficiently. Fun fact, during the Testnet Alpha with over 13,000 traders, and we did about 90,000 swaps. So testers did a really, really good job here and broke our indexer. So we had all hands on deck on the weekend to keep it alive. So good job, testers. There's a lot of going under the hood. So we are adding new features to the protocol that benefiting everybody. Our main focus lies in safeguarding and hardening the protocol. So long story short, we're adding security features at the moment. And of course, last but not least, we prepare now for the Testnet Alpha, for the Testnet Beta launch.
Yeah, great stuff. And big shout out to all of the testers who made our devs work some over hours. So that is what we want to see for the next testing phase. If you see something that you can break, please go ahead. That is what is making Nabla more robust. So yeah, we're very grateful for everybody chipping in to this point. Before we are going to open the stage for the community so that all of you guys can ask your questions, let's move to the strategy part. Aaron, I'm going to direct this at you. Maybe you can give us an outlook on, what is ahead for Nabla? What should we expect moving forward from here?
Sure. So as said, we just had our Testnet Alpha campaign ending a few weeks ago, and now we are preparing Testnet Beta, which will be feature complete, so which means all the security features you want to have on mainnet are in, and all the improvements that Niels mentioned. Testnet Beta campaign will start in around mid-April. It's again gated, so we will have less testers in beta, and it's really to test these new features and some improvements since the alpha. Then something like 2 weeks after Testnet Beta launch, we want to be ready for audit. We had already a first audit last year, actually, but after the audit, we still did some major changes into the Backstop pool, and therefore we need to partly redo it. And in addition, we will have a bug bounty campaign. Then, depending a little bit on the outcome of this, we aim at launching on mainnet late May, the earliest, probably rather June. And there will be initially a gated and capped mainnet alpha, which runs for 2 to 3 months, and then we will gradually open it up. Now I heard already quite a few people asking about TGE. We would say it if we would know it. At this point, it depends on a few decisions that we still need to take. The only thing that I can say, the latest 2 to 3 months after mainnet launch, but it could be way earlier as well. It really depends on a few decisions.
Right. So yeah, I would suggest everybody to stick around. Make sure to follow our socials so that you can be up to date when these decisions are made and when any news transpire from that. All right. I think this is actually a very good time to let people on stage. If you have a question, now is your time to direct it at the team. In the meanwhile, we have collected a lot of your questions. So yeah, as when people are coming onto stage, that is your best chance to ask your question. But we have also collected a lot of questions from the community over the last week. So yeah, Apayat, if you see some raised hands, then please let them on stage. But in the meanwhile, let's actually pick one of those questions that we have received. I think this one is for you, Aaron. Can you tell us more about the redeeming pool? Are there any risks for Nabla over redeeming or something going wrong? Am I still audible, or did we lose you, Aaron?
I can hear you, Jonathan, but not Aaron.
Okay.
Yes, I can hear you as well.
All right. Yeah, we'll just skip this question, move on to the next one. I think this is a good one for you, Abrayat. What should people do with their Amber rewards? A question we get quite a lot, even here popping up in the team stage chat. So yeah, what is the best thing that people can do with their Amber?
All right, yeah. So in regards to the Amber points, as you all know, it's an on-chain point system that we're using to track basically your interactions to the protocol in general, from social campaign to testnet and everything. So we had some campaigns completed and the points have been distributed. What I can tell you is hold your points, because it's used to get your contributions to the protocol. And then what you can do is you can try to accumulate more points, because it is going to be important in the future. So your interactions are very important to us, and the more points you accumulate, it means the more interaction you have on the protocol. So yeah, the only thing I can say is hold your points and try to get more points.
Good things coming to those with Amber points for sure. Yeah, again, I want to invite all of you, if you have a question, you can come up on the stage and ask it directly. Of course, we're keeping tabs on the chat here as well. So yeah, you can post your question here too. All right, with just going over the prominent Amber question. Another question that we quite often received is when Zili rewards, and I think Gökhan, you would be a good taker for that question.
Shall we go back to Aaron for the previous question? He's back.
Oh yeah, fair enough. Yeah, Aaron, let's start with you again. So the question was about if there are any risks for Nabla with over-redemption, or if there are any concerns about the redemption pool.
Yes, sorry again for these sound issues. I don't know what happened, but rejoining the room apparently solved it for now. I think you're talking about the backstop pool, right? So the backstop pool is covering all the risks in the system, we said, which means in practice, if you provided liquidity to, let's say, the ETH pool, and the ETH pool is not full and you want to withdraw your ETH again, or everyone wants to withdraw their ETH, they could not do because the ETH pool is not full, but they have then the right to redeem the value, the Oracle value of their ETH in USDC from the Backstop pool instead. This is basically the insurance that the Backstop pool gives, and this is the way how it takes on the risks. You might think that redeeming from the Backstop pool is bad to the system because you pay out USDC, but that's not true, because in reality it pays out USDC, but you forfeit your claims on the ETH instead. And you do so at the Oracle value, whilst if the pool is depleted, this means that the price of ETH on Nabla is higher than the Oracle value. In reality, it's even a small win to the system. But what can still happen from the Backstop pool is that it loses in value because it takes on all the risk. It's non-directional risks. It can go up or down in value depending on how the imbalance in the system is and how the prices change. But of course, it can lose in value as well. So we have a certain set of security measures that basically get triggered if this, what we call over-collateralization, goes to dangerously low levels. Let's say if we reach only 115% over-collateralization, which means value in all swap pools plus the value in the Backstop pool is only 1.15 the deposits in the swap pool. And the first security measures are triggered, which are quite soft. For example, you just can't deposit more into the swap pools and these kind of things. Furthermore, you can't redeem from the Backstop pool instantly all the time. It's basically like in a perp exchange, you need to trigger your withdrawal and then come back, I think, 10 days later and finish it, so that there's some time in between, some time lag, and therefore a security buffer. We have quite a few of these security measures. I would recommend before joining on mainnet in the Backstop pool to read them up in our docs. I think they're not yet defined in the docs, but they will be before mainnet launch. And they are, again, quite similar to what perp exchanges do as well, if you provide liquidity there. But all in all, I said redemption itself are not a big problem. It can just be that the Backstop pool runs out of USDC and you can only redeem in one of the other assets that have a surplus. But what might be a problem to the Backstop pool if there's a big loss to the system, but we care for that.
Right, so a lot of thought going into that to mitigate any problems before they arise. Perfect, Gent. We see you raising your hand. Let's get you on stage. All right, there you are. Please unmute your mic and then let's hear your question.
All righty, can you hear me now?
We can.
Hey, thanks for having me. Thanks for letting me ask a question. It's a quick one, so I'll get to it. I heard you guys was bring up saying you're going to be doing another round of beta testing and then eventually the alpha mainnet launch. And I was just curious if you had any criteria or any direction going forward on how to participate in that.
Gökhan, do you want to answer? I can just maybe very quickly say the beta testing will be very similar to the alpha testing. We don't want to waste your time. For the alpha testing, you got some Ember tokens, but you will get something else as well, an NFT. Gökhan probably will tell about it. And this is basically the main reward. And you don't need this twice. So there's no point in joining the beta if you joined already the alpha. Wait for the mainnet alpha. If you have not joined the alpha yet, then I give the question to Gökhan or the answer regarding the criteria, the potential. I think we will target different DeFi user groups that will be eligible, right?
Yeah, so I want to reply several questions actually around that topic. So everyone is curious about they participated in Testnet Alpha, they got Ember rewards. What could be the next expectation? So Testnet Beta is actually for new users mostly. We cannot announce the criteria, but it will be on-chain criteria, such as maybe holding the assets that we are planning to list or being active in other DEXs. So We will announce it before when we are about to launch. But for the expectations of the Testnet Alpha participants is actually they will have a very special NFT that will enable them to participate in mainnet alpha, and big chunk of the Nabla reward, and in that case Amber reward, will be reserved for mainnet alpha. And without this NFT, the outsiders will not be easily to participate. If only if the full pool caps are not full, then it will be open to non-NFT holders. And we hope to have it filling in up very short time. And it will be 2 to 3 months period where we expect to generate very high APR. Of course, that's not guaranteed because the rewards are depending on the future value of Nabla, which we cannot comment before it's listed. But we make sure it will be very rewarding. And about this special NFT, yeah, we are working on that. We will announce very soon what will be the criteria in terms of how much Amber you should hold or how much what should you have done. So we cannot announce it to prevent, of course, Sybil the exact criteria.
Well, all right. That definitely answers my question there. Thank you very much.
Thank you so much for your question. Yeah, very interesting. So an NFT to look forward to. Yeah, again, make sure to follow all of our socials so that you'll learn of it ahead of time. Yeah, thanks so much, Perfect Gent. If somebody else has a question, please raise your hand. Sorry, I keep losing my push to talk button. Yeah, we got also more questions.
Yeah, we have.
Please go ahead, Gökhan.
You asked me just before, Aaron, about real reward. So they've been distributed yesterday together with other campaign rewards such as our AI generative art competition, forecaster campaigns for recasting and commenting. They are all distributed yesterday. So participants and winners can check their wallet.
Great news there. On the topic of rewards, we had more questions in this respect. One of them is about the Galaxy Oats, and another one is about Farcasters. Can you maybe tell us a little bit about these reward structures here?
Yes, so Galaxy platform is used for gating Testnet Alpha. So we wanted to make sure only participants who are active, who can participate in the testing. So instead of just accepting the full whitelist of each taker, we wanted to filter people who are more willing to participate by adding just few quests, but they were not demanding, such as more than half of them are simply clicking links and reading the document using the app, so they know what they're actually applying for. And only one requirement was to connect to Discord. And although we have anti-Sybil bot, humanoid bot for human verification, we didn't make it a requirement for most campaigns, but we added other possibilities like the Binance BEP token holders or Bitcoin passport holders. So they were all precautions against people. So we wanted to have actually as much as unique people to grab those rewards. And we didn't allocate any special reward for oath. So Galaxy was just for gating the testnet alpha.
Yeah, perfect. Thanks for that. Yeah, we already see again today the Pythians showing up in full force here. And of course, they had some questions as well. So what we've been seeing is, will the beta involve PIF status? And also, will the beta be incentivized? I think we can lump those two questions together. Aaron, do you want to take it?
Sure. So I think I answered half of that already. Testnet Beta will be incentivized similar as Testnet Alpha, but there's no point in participating in both. So we don't want to waste your time. It's the same UI. We rather want to have new people in here. And Testnet Beta will be way less people, maybe 1,000 testers, whilst Testnet Alpha we get, in the end, I think 13,000. Stakers were eligible for the Testnet Alpha. I don't think we have plans for having the ones that did not participate in the Alpha to have them in Testnet Beta, but that's a question to Gökhan to decide.
Right, yeah, we're going to hear more of that. We have one question here. How do you solve the thin liquidity pool? I think I would interpret this question of, how does Nabla work with less liquidity available than, for example, Uniswap? And I think this ties into the whole idea of Nabla offering greater capital efficiency. And I think that's a good question for you as well, Aaron.
Okay, there are, I think, two answers to this. First of all, thin liquidity, I mean, this is especially an issue for real-world assets, for example, or for these T-bills and these. You can't do a big swap, something like 2 million on Uniswap, because it would completely crash the price. Now, the reason for that is that liquidity is expensive. As I explained initially, you have this permanent loss, you have the opportunity costs, you have all the risks. And we reduce these costs by up to 90% by avoiding impermanent loss, by avoiding the need for the pairing capital, by disentangling the risks from the asset provision. We reduce the cost a lot, and therefore the asset issuers, if they want to achieve a certain liquidity, they can do it much, much lower cost than Nabla. And therefore, maybe they decide not to save on the money, but to incentivize 5 or 10x more liquidity on Nabla. That's only one answer to the question. The other answer is we don't even need so much liquidity, because on Uniswap you need to have liquidity in a certain range around the current price, because the price moves up and down and you want to cover it all. For Nabla, basically this range of liquidity moves together with the price, with the Oracle price. So you can concentrate it much more compared to Uniswap, and we need much less liquidity to offer the same user experience or swap liquidity. And so on Nabla, depending on the asset a bit, but the liquidity will be concentrated within 1 or maybe 2% price change around the Oracle price, not like on Uniswap where you have maybe plus minus 10%. And here again, I can just shout out to Lifinity. There are big differences between Nabla Finance and Lifinity, but the one thing that we do very similar is this pricing. And you see, if you, for example, check on DeFi Llama, just the capital efficiency of Lifinity, the volume per TVL, you see that they have something like a factor of 200 per day, which means they may do 200 times more volume than they have liquidity. Whilst on MMs like Uniswap or PancakeSwap, this number is usually below 1. This is really an immense improvement in capital efficiency.
Yeah, amazing. I'm not a big maths guy, but that's quite a big difference there. Certainly something to keep an eye on once it is live on DeFi Llama. That is certainly a very interesting metric to track here. We had one question about the Pyth Oracle. So somebody wanted to know, how trustworthy is the Pyth Oracle, and is there a way to verify its data? Sensitive question, maybe to all of the Pythians in here. Zero cool. We'll get to the bottom of that. I think, Niels, you as a developer, you might have some good insights here.
Yes, thanks for the question. I guess we have some Pythians in the audience who can probably answer the question better than me, but let me try anyway. For those who don't know Pyth, it's a decentralized price oracle built on the Solana blockchain. It provides high-fidelity real-time market data for DeFi applications, and we are using the Oracle now for Nabla to become an Oracle-informed AMM. And regarding this question, I would say Pyth is one of the biggest Oracle providers out there and trusted by hundreds of protocols. Unlike on centralized exchanges, which rely on a single entity that provides data, Pyth aggregates multiple sources and ensures, therefore, the accuracy and reliability. And the Pyth network is decentralized, and a median price is in some way generated from all the price sources over the field. So it generates the price from DEXs, from centralized exchanges, and of course from stock exchanges if we are talking USD assets. So from the docs, they are quite good. You get that the price mechanism is that they form a group. So if there are any anomalies or some manipulation, the data provider gets excluded from the group. So the algorithm shows that as long as the majority of the data providers are correct, then the price is correct, and we are using that price to use it directly in our protocol. So
I can add 2 more sentences on that. First of all, Pyth is the go-to oracle for most perp exchanges, for example, nowadays as well. It secures in DeFi something, I don't know how many protocols, but hundreds, and something like 5 billion in TVL and 100 billion in trading volume. But we, in the future, won't rely solely on Pyth. We will have a fallback oracle implemented as well, not for the mainnet alpha launch probably, but soon after, before we increase the caps too much. We will use a second oracle to cross-check, and if the 2 oracles deviate by a certain threshold, then we will freeze the respective pools as a security measure and look into it. So this is really top-notch oracle, but we will take care that even if something should go wrong, it is down for a second or something like this would not impact our pools.
Yeah, great. Sounds like a solid plan is in place. And Pyth is actually not just a single guy editing a spreadsheet, but is aggregating its prices from various sources. So shout out again to the Pythians in here. Great to have you. All right, we are getting to some of the most interesting questions now. So those are around the audits. You already touched upon that briefly, Aaron, and also the tokenomics. Also, I believe, briefly touched upon already. But since we're entering the end here shortly, maybe you can just go over these 2 topics briefly again. And then we have already gone through most of the questions. And again, here's your chance to come up to the stage and ask a question. But Aaron, about audits and tokenomics, anything to tell us here?
Audits I mentioned already before. We had already a full code audit last year. We just made some major improvements on the Backstop pool design afterwards, and therefore we need to finalize this audit or redo it in parts. So this will be done as soon as we are ready for it, so during the testnet beta phase. We will have a first audit. In parallel, we will do a bug bounty campaign with either Code4Arena or Heads Finance or both, still to be seen. And Not sure whether we managed that before mainnet alpha, but for sure before we increase the pool caps, we will have a second code audit. Regarding tokenomics, something I would love to tell, but it's not publicly available yet in detail, or we don't have it fixed in all details. What I can say already is that more than 50% of our tokens are reserved for the community. And another chunk for the DAO, and less than 40% is for our team and investors and these kind of entities. Regarding the token mechanics, we have a novel approach. It's something a bit in between what Curve is doing and what Velodrome, Aerodrome are doing. But it's with our own spin. But it's still a bit work in progress, so too early to talk about this in detail.
All right. Yeah, that is making very hopeful for great tokenomics. Yeah, I'll try to squeeze some more alpha out of you as we go. Okay, we have one question that I would like to direct at you, Gökhan, and that is if Nabla has any VC backing.
Yeah, good question. Community is usually curious about VC backing because VC backing is kind of sometimes a proof of the reliability of the project. But there are also many good protocols who didn't raise at all from VCs, just like the liquidity which Aaron mentioned. So we have one VC backer, which is called Smate Capital. You can read a very good article about actually Nabla Finance, how it works from Smate Capital. But the rest of the investors are angels, investors, similar to you, our community. And yes, so we can say Nabla is a community invested project more than VCs at the moment.
Yeah, I think that is also leading us to the next question quite nicely, and that is, will there be a public raise, and can the community get involved in that? Oh, sorry, Gökhan, I think that is a good question for you as well here.
Aaron, you or me?
I don't care, as you want. I can as well.
Okay.
Yes.
Yeah.
Okay.
I'll leave it to you.
So the details are not yet decided. We will have another race before mainnet launch, or in parallel to mainnet launch. That's for sure. We will give investors access to that, but it's not yet decided whether we will as well raise from VCs or make it a full public sale. But what we can say for sure is that testnet users will have a right to join the round. At least a certain allocation will be reserved for them.
Okay, that sounds very interesting. So yeah, please keep us posted here on what the decision will look like. And with that, we are already getting to our last question. And with that, also your last chance to be asking a question here live. I think quite the substantial question, and that is if there is any idea what chain the Nabla mainnet will launch on. Aaron, maybe you can tell us a little bit about that.
Yes, so I mean, for sure, we won't launch on one chain only, but there's of course always the first chain, which is the most important one. And we currently plan to launch on Base first. I say we currently plan because we're just a bit cautious because we experience that the landscape changes so quickly, and now, for example, the gas price is shooting up on Base. So we keep basically we keep an eye on the development on different L2s and finalize the decision very late on. But let's say 95% sure Base is the first chain. A few other chains are already in the making to follow shortly after.
All right, sounds great. No objections personally with that. Yeah, so that is all of the questions that we collected. If you guys have any more questions, you can always drop them in the chat and we will pick them up. We either will reply to them directly there, or if it is a question that is suitable for a public round like this, then it'll be discussed in such a format here as well. All right. Yeah, with that, we have come to the end here of our first community call. Thanks to everybody joining us. It's been a real pleasure to host all of you here. Yeah, thanks to you, Aaron. Thanks to you, Gökhan. Thanks to you, Niels, for joining. Thanks to Abrayat as well. And yeah, any closing thoughts from you guys?
I'm just really thankful that you all joined. It's a pleasure to see the community being interested in what we're doing.
Definitely. Yeah, we will make sure that following us is worth your time. Sorry, didn't want to cut you off, Gökhan.
No, same here. I just wanted to thank everyone who participated. We will have some announcements for Testnet Alpha participants and, of course, for Amber holders in the coming weeks. I think they're almost now in April. So in April, we'll announce some good news. So stay tuned for that.
Perfect. Niels, Abrayat, any closing thoughts you want to leave the community with?
Thanks for having us.
Thank you. Thank you for having us and have a great weekend.
Sounds good. All right, that's it for this episode. Thanks again, everybody. Make sure to follow us. Tell your friends. The next stage is going to be interesting. And yeah, hopefully see you around the next time. Have a great weekend, everybody. Goodbye.